Varakanu, Vishwan Balla.
Vishen, how are you?
Good morning, Rajesh. I'm fine. How are you?
Very well, thank you. How are things with you? Long
Yeah, so
time.
things are going fine. Yeah, not bad. Not bad. How
Okay.
about you? How are things at the company?
All well, all well. I see you I'm seeing a lot of your reports coming through also. Interesting.
Yeah, we just trying to get research out in the market. We've done this for many years. The idea is now to
Hmm.
sort of publish and see the feedback. So that's the
Yeah,
idea.
yeah, I'm giving you a positive feedback.
Thank you so much. Always appreciate your feedback. Thank you so
Okay,
much. Yeah,
thank you.
yeah.
Anyway,
Cool.
so on to your questions.
Yeah, just like general housekeeping question, how are things at the company? What's happening? I know the company has a long-term strategy, so you don't deviate from that, on a quarterly basis. But just a quick overview of how things are. How do you see the portfolio companies? The usual questions. So, firstly, how has the first half been? How do you see the market? How do you see the portfolio?
So, couple of things from a point of view of deployment of, we have quite a lot of cash. It's a zero debt company. So, from a deployment of cash point perspective, we've kind of accelerated our objective to go into fixed income. So we have built up a fixed income portfolio, which is beginning to show some numbers, and we'll collect as much as cash as possible in terms of interest. And also, given the current interest rate scenario, we're hopeful that, the coming years, it'll probably give you some capital gains also. At this point in time, that's been a focus area in the first 6 months. It's played out quite well. They also kind of slowly building up a GCC portfolio in equities. So that's kind of trying to balance out the fixed income, fixed return perspective versus a growth perspective in terms of equities in GCC. And as far as a traditional business goes, that continues to give us our positive cash flows. So essentially, it is a large land bank which we have in Sur, which is under a long-term lease with a strategic partner. So that lease agreement is very much in place, and that's kind of also the founding bedrock for this company in terms of where this company was built for and what it was designed for. So that continues. We have continued to pay our 5% dividend, which we did for last year also. And I think, we are in a pretty good shape going ahead in terms of continuing that payout. Of course, this is a board decision, but, from the numbers that I see, I think it's quite doable.
Yeah.
Outlook, we still believe that, fixed income is going to be the way forward as far as this 6 months goes, and perhaps the first quarter of next year. We're also building up the GCC portfolio, which will probably step in terms of providing, returns from a growth perspective. We already have a US portfolio, a small US portfolio. We have strategic assets in terms of equity stakes in a couple of companies here, which have had some headwinds because of COVID and post-COVID impact. That is slowly, bearing some fruit, but there are some challenges there, especially some of our large investments have not been really fruitful in the first 6 months. But based on our discussions with these companies, I think it's a question of how they manage their resources. And hopefully 24 would be a better year as far as our large investments are concerned. We are seeing some positive signs, but it's still more. There's some more road to go as far as that is concerned. So outlook, 6 months, positive. Next year, we are building a base for next year, so that's also going to be positive. Cash generation has been also pretty good. Capital growth, we're building up investments for capital growth.
Noted. Interesting. Rajesh, you mentioned, you made some fixed income deployments. What is the amount for the same? I don't seem to see that in your notes. or in the balance sheet. So what is the fixed income deployment?
So in the balance sheet, what we have done is we have put it under FVOCI. So it will typically show up in the balance sheet as fixed income investments. Currently, our exposure is in excess of 1.5 million reals, and it is dollar based. In addition to that, we have investments locally also, which are again fixed income, and that is also giving us an even clip in terms of returns. So in the balance sheet, you should be able to see it. Let me just go to the balance sheet. If you look under investment in bonds on the uh, financial statement, you will see that number looking up.
Got it. Got it.
That number is significantly increased as we have gone ahead. So
True. True.
financial
And
assets in FVOCI is also investments in equities. Then we have a
right.
separate line item for bonds.
Got it. And Rajesh, these deployments were made at sort of what sort of stage of the interest rate hikes that took place? Because there would be a significant difference in sort of deployment of
Yes.
fixed income, let's say 12 months back to let's say 3 months
Yes.
back. So at what stage were your deployments made?
Yeah, good question. In fact, what we have kind of, that was one thing we kind of very consciously rolled it out. So some of them are as recent as 6 weeks and 6 to 8 weeks. So we've been able to catch a significant portion of the higher end of the interest rate curve. Now, there have been some investments, that is bonds which we have purchased in the first quarter of this year. Those, of course, come at a slightly lower rate. But on a blended basis, I think we have done a decent this thing. So we are in the 5.25 to 5.5 kind of range.
On the dollar bonds.
Yes.
Yeah, that's pretty good.
Unleveraged.
And
Unleveraged. No leverage.
absolutely. No, very good, very good. That's a great job. Great job there. And what would be the tenor of these deployments on average if there's not a standard sort of tenor?
So what we are trying to look at is we're not looking at a very short end of the curve. So it's like a medium end of the curve. So these papers typically have 3 to 4 years. We're trying to push that into the longer end of the curve so that there is some amount of balance about the kind of paper that we are holding, going forward. Because typically the intention and the objective is to hold it to maturity, but at the same time also look at it opportunistically to see if there is any kick up in terms of capital growth.
Fair enough. No, that makes sense. Just wanted, okay, so 3 to 5 years, interesting. Just with regards to the portfolio, I mean, it's remained what it is for a while. Just wanted your thoughts on, I was on the national gas call the other day, and they're sort of looking at a turnaround. They had a few challenges. The sectors, sort of depended on repricing, which has not happened, whereas the input cost has gone up. They've now done a few divestments. They're trying to, sort of get back in shape. So, how do you see that company sort of over the next, if you're actively involved, or it's more like you have a financial stake in it, and then, the company does what it does. So
we have a financial stake and we have a board member on the company. Now, in fact, when I mentioned about investment in local equities not really helping us through this year, this is one of the areas of concern. Now, national gas, as you very correctly said, has gone through a change process. Now, much of that challenge is because of the fact that they are bound by some government rules and regulations in terms of their exit or their pricing of their end product. They had a subsidiary or an investment in other countries like India, which they have divested. They have deleveraged their balance sheet. So a lot of stuff has happened close to last year, 22, close to 22 and early 23. And then now they have a new management in place, which is trying to look at it from a fresh perspective. So they have a Malaysian subsidiary or a Malaysian operations, which is in a very competitive market, but they have kind of had a decent foothold there. So currently their market is limited or kind of oriented towards Malaysia and Oman. My understanding is they are also trying to broad base their businesses into Saudi Arabia.
Saudi,
Now,
yeah.
now Saudi obviously is a very large market, but it's going to take, there is always a gestation period between the time you put your foot on the ground to the time when you actually begin to start seeing some, returns on that investment. So it's kind of a transition phase to speak, so to speak. But at this point in time, it's for us, it's going to be a wait and watch attitude because it is a strategic stake. B, it is not exactly a liquid market. So we kind of hopeful that things will get better as we go along. So 24 is more hopeful than 23.
Fair enough. No, valid point there. I was coming from the point of view that, like you mentioned, it's part strategic, it's part financial in nature. And given how the stock price has been, I mean, it's only been one way down.
Yes.
Should things pan out the way you mentioned, with sort of this reorganization and restructuring and deleveraging. So over the next, let's say, 18 to 24 months, if there was sort of a revival in operations and sort of a jump in operating performance, which should ideally reflect in the stock price, would there sort of be would you relook at it and say, what, it's done well now, we would look to divest, or you would still continue to hold on to the legacy portfolio and sort of look at additional incremental cash for newer opportunities?
It's early time to make that comment, but ultimately it's an investment. So when we see an opportunity for exit and we think it is a suitable exit, I think we'll take that call and make sure we, go ahead and do it. It's been with us for a while, and there have been better days. Now, it's a function of how the transition is going to happen. So if Saudi on the ground situation, Saudi really begins to pick up, then there is going to be definitely some improvement in their financials and probably on the stock market too. And also, this is a strategic stake. So if somebody is going to look at it from acquisition point of view, probably that might be a good opportunity. But it all comes down to valuations and how we are going to kind of value it and look at it at that point in time. I mean, one case in point is we were holding in Vision Insurance. It was a 5% stake, which we exited out because at the time of merger, we had an option whether to, stay invested and take on shares in Oman Qatar Insurance, which was the acquirer, or to choose an exit. We chose to exit out of that transaction. So I think we are waiting for an opportunity to see how that kind of pans out.
Got it.
Yeah.
And one last question from my side.
Yeah.
Sorry,
Go ahead.
sorry, please go ahead.
Yeah, go ahead. Yeah.
Last is when you look at sort of an investment, what is your sort of targeted IRR or return when you sort of look at an investment, irrespective of the time frame? So you say, here's an opportunity, it looks compelling, it looks interesting, we'll pick up a financial stake, but what would sort of be a return requirement from your side before you look at sort of an opportunity?
Well, we'll have to break it into a couple of buckets here. In terms of real estate, traditionally our IRRs have been in excess of 15% or close to in excess of 14 to 15%. But, when it comes to fixed income, obviously that is not going to be. So each bucket has got its life of its own. So when you look at a fixed income bucket, we're talking about say 5 to 6.5%. If you're looking at the long-term strategic stake, we tend to be in the mid-teens or closer to the 12 to 14% range. That would really make sense because at the end of the day we are also having to pay out a dividend, and that's also a factor to think of. So it's more of a case by case kind of decision.
Got it. Perfect. Yep.
Yeah. I think Khalid, there's a gentleman Khalid on the who's.
Yeah. That's it from my side, Rajesh. Thank you and wish you guys all the best.
Thank you, Bishan. Are you done with your questions? Any other questions?
I'm done. Yeah, you can go ahead. Yeah. Okay. Thank you.
There's a gentleman Khalid on the chat who says, what happens to the lease liability of 3.4 million if the contract get renewed. No, no. Mr. Khalid, could you identify yourself? Hello,
Mr. Khalid?
Mr. Khalid,
Mr. Khalid?
you are an investor. Anyway, so Mr. Khalid, essentially, the numbers that you're asking about is essentially a lease transaction which we have for the land that we have in Sur. Now that is a long lease transaction. So at the end of the transaction time, which is 2024, that will essentially extinguish itself. So that liability will no longer be in place. And we are not able to hear you. Okay.
No, no, I have written. I have sent him. We are not able to hear Mr. Khalid.
No, Mr. Khalid is on mute. So,
Oh,
yeah. So anyway, did I answer your question, Mr. Khalid?
yes. What
What
about
about
renewing the contract?
Yes, this Sur complex is on a long lease with Oman LNG, and they have been our partners for the last in excess of 23, 24 years, and we are in discussions about renewing the contract and looking at it for a long-term contract of because the senior management of Oman LNG do stay in that complex. It's about 130 villas plus all other facilities as an integrated housing complex. So there has been some discussions. There's a lot of negotiations and discussions, but it is very early times for me to put that on record here because it is still under negotiations. At the point in time when we finalize and we are able to put this in paper, we will convey it both to the investors as well as to the stock market. I'm sure you will hear it on the stock market bulletin board also. So at this point in time, the discussions are in progress. It's positive. We are working on it. Thank you very much, Mr. Khattar. Thank you. What is any other questions you have?
Mr. Manna is there?
There's another person, Mana. Mana, any questions from you? Thank you, Mana. If there is any other question, feel free to either ask on the chat box or and if you could also let me know which company you represent. Are you an investor or you work for a company who write reports?
Oh,
Oh, United Securities. Okay. So if you have any other questions, feel free to reach out to us either now or later. Bishan, if there is any other questions that you may think of, feel free to ask.
That's it for now, Rajesh. But as always, I appreciate the transparency, and if anything, I will definitely reach out to you guys. Thank you so much once again.
Thanks, Satan. Take care. we are open to any other questions. If you feel, if you want to raise, please feel free, or we can close this conversation. I suppose there is no other questions at this point in time. So thank you for your participation, and until next time, good luck and all the very best.
Thank you all.
Thank you. Thank you.
Okay.